Where lies the next trading opportunity for Bitcoin? If you're interested in knowing more about this, please keep watching. I welcome you to join my WSOT team. Let's look at the squad showdown. Let's take a look. We have all the global teams in different language divisions, ranked based on the number of members. As you can see, besides the few teams with over 1,000 members, hey, there is a Mandarin team on the list. We are currently ranked 8th globally in terms of the number of members, and the gap to the 7th position is only 30 people. I believe that with the support of all the viewers watching my channel, we can overcome this small difference. Once we do, we'll become the 7th largest team in the world. According to the profit rate calculation rules, the more members a team has, the higher the chances of achieving better rankings. So, I warmly welcome all of you to join my team, which has a great opportunity to climb the ranks in the Mandarin division. Now, let's switch to the Bitcoin market. From the daily chart, the price did break below the support level not long ago. However, after the downside breakout, there wasn't a smooth downtrend. If you had shorted the market during the downside breakout, wow, you would have noticed that there hasn't been much profit generated in this period. Currently, the price has fallen below the previous support level and has been oscillating for at least 4 days. This situation isn't favorable for short positions. In a strong downtrend, we would have seen a more significant drop. Right after breaking down, the price should not break below and then oscillate in a position near the downside breakout. This is not a very favorable situation, especially for the bears. In a solid bearish scenario, like the one we experienced earlier, where the price broke below, we noticed that it dropped significantly and swiftly, with a substantial increase in trading volume compared to the surrounding period. This increase in volume was very evident. For this kind of downside breakout, it is a very significant and genuine downside breakout. You can observe that no matter how it bounces back, there is still a considerable gap from the original level. You can observe the rebound after the price decline. Our initial point was around the range of 54,000 to slightly above 53,000. The rebound only reached around 52,000 or slightly above 51,000, but it couldn't go back to the previous level. Such a downside breakout is considered very healthy and worthwhile for bearish trading. In other words, it is worth taking short positions. However, holding short positions when the price drops like this is torturing. If we look at the volume performance, we will notice this. If we observe the entire volume pattern since the price started rising, looking here, we can see that the bears don't have a dominant advantage. Although the bulls have not overwhelmingly defeated the bears don't have a strong advantage either. Even though we observed the later period of the consolidation, where the price dropped, the bears didn't gain significant dominance. The bears' volume is relatively flat. Let's switch to a smaller time frame, a 4-hour chart. Here, we can identify 3 downward movements. One earlier, one in the middle, and the one that occurred yesterday until now. These 3 downward movements form a pattern. Let's draw it. It's known as a wedge. Why a wedge? Wedges occur when the magnitude of price declines reduces over time. For example, if we observe a trend line with a similar slope, it's a wedge pattern or a channel pattern. Let's start by drawing the wedge pattern. This chart shows a wedge pattern, while this one follows a channel pattern. When a channel pattern is observed, you can see that the fluctuation remains relatively equidistant. Then, it lacks a clear directional bias, meaning there is no clear dominance between the bulls and bears. Of course, if we talk about the channel, usually we will follow the original direction when we came. If the price were a downtrend when it arrived, we would anticipate that it's most likely to continue downward. However, while this pattern is being formed, we notice that the magnitude of the downtrend is decreasing, becoming narrower. Initially, the downtrend was significant, but later on, it became narrower. It got narrower. In the end, there is a high probability that the price could break upward. Actually, the situation here is quite similar. In these downtrend segments, you can observe that the decline is getting weaker, both in terms of price changes and volume. You can see that the volume is gradually shrinking. This indicates that the current downtrend is indeed showing signs of weakening. However, a weakening bearish trend does not automatically mean that we should go long directly, as there is still a possibility of oscillation. If we decide to go long, I reckon we should wait for a clear indication of the bullish trend starting to strengthen. Now, if the price can sustainably move back above approximately 29,700, for example, if we see a candlestick pattern stabilizing above 29,700, then the bearish positions will be very risky. And if there is also an accompanying high volume, I might very well enter a long position again when it gets back to the 29,700 level. Of course, we need to see a strong surge in trading volume to confirm a robust bullish trend. At present, the bullish volume hasn't shown significant strength, while the bearish volume seems to be gradually weakening as it sustains the declining trend. A notable observation is that in previous downtrends, every time we experienced a new low, at least breaking the previous low levels, as you can see from these several drops, this segment and this, they made new lows. However, in the current downtrend, the price managed to hold at the previous low, indicating short-term support around 29,000. 29,000 has become a support level, and this support level has been tested and validated. After the decline, it rebounded. It further reinforces its significance as a support level. However, I am not currently holding any bearish positions. I didn't make any short calls. In this drop, I am waiting for a potential opportunity to enter a long position. Now, I think the selling force appears to be weakening. However, we still need to wait for more clear and precise signals before considering a long position. It's safer. Now, if we look at the 1-hour chart, we can observe that when it breaks below a certain price level and then returns to test that level again in a short period, it appears somewhat unreasonable. Well, testing is normal. As you can see, when we switch to the hourly time frame, it aligns remarkably well with technical analysis. You can see that in previous instances, it conforms quite accurately to the technical patterns. Technical analysis indeed works in a fascinating manner. After a downside breakout, the previous support level becomes a resistance level upon retesting, an S/or roll swap. Now, if the price frequently hits this level, then the effectiveness of the resistance around 29,700 will start to diminish. In fact, if we quickly reclaim this level, it might cause anxiety among the bears. I believe that when a downside breakout occurs in a region like this, it often accumulates a significant number of bearish positions gathering at this area. If the price rapidly rebounds from this area in the short term, it can lead to stop-loss orders being triggered, and these bearish traders will face losses. Hence, if the price swiftly climbs back above 29,700 in the short term, short sellers will rush to cover their positions. Alright. Thank you. You're welcome to like my videos, subscribe to my channel, and share my videos. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.